Hello everyone, this is homework problem 9-3A, and in this problem we find out some information about the Oreo company, and we learned that as of January 1st, 2017 they had the following assets. They had machinery, a forklift, and a truck. And in this chart we learned the original cost that they paid for each of their assets, the original purchase date for each of their assets, the useful life in years that they expected to receive out of the asset, and then the salvage value they expected to receive at the time of disposal of the asset. And we're given the following information. During 2017, each of the assets was removed from service. The machinery was retired on January 1st, the forklift was sold on June 30th for $9,840, and the truck was discarded on December 31st. And we're asked to journalize all entries required on the above dates, including entries to update depreciation where applicable on disposed assets. We're told the company uses straight line depreciation, and all depreciation was up to date as of December 31st, 2016. Okay, so for the first asset that we're going to dispose of is machinery. And so we need to record the accumulated depreciation of that asset. And we learned that they originally purchased that asset on January 1st, 2007, and they expected to have a useful life of 10 years out of that asset. So they're disposing of that asset on January 1st, 2017, so they've had the full useful life out of that asset. So we would record that full value of $58,220 when we journalize the entry for recording the accumulated depreciation of that asset. And so we would use January 1st, or the date that they dispose of the asset, for our journal entry. And then we would first debit the account accumulated depreciation equipment, the full value of the machinery, and then we would credit the account of equipment for $58,220. And again, we know when we credit an asset account, that's decreasing the value of that account. So we're decreasing the value of the asset account by $58,220, or the equipment asset account. And I made up a little chart here that shows the actual depreciation process for that machinery. We know that cost minus their salvage value equals our depreciable cost. So original cost of equipment is $58,220 minus the $0 they expected for salvage value gives us our depreciable cost of $58,220. And then we would divide that amount by our useful life in years, which would give us our yearly depreciation expense. So $58,220 divided by 10 would give us a yearly depreciation value of, or expense of $5,822, excuse me. So for 2007, we would have $5,822 of depreciation expense. 2008, we would have twice that amount. 2009, 3 times that amount. So at the end of the useful life of the asset, the depreciation expense of $58,220, or 10 years of depreciation expense, should be the cost of the asset minus their salvage value, which in this case would be $58,220, because we know they expected to receive $0 of salvage value out of that asset. So that's one way that you can check and see how the depreciation works out. And then for the next asset, we're told that they're selling the fork truck, and they sold that fork truck on June 30th. So the first thing we need to do is record the depreciation expense for 2017, because we learned that the depreciation for 2016 was already recorded, so we only need to record the expenses for 2017. But in June 30th, is when they sold the fork truck, so they would actually only record half a year's worth of depreciation expense for that rather than the full year. And for the fork truck, we learned that the cost of the truck was $24,600 minus our $0 of salvage value they expect to receive, which is $24,600 depreciable cost. And then the useful life of that asset was 5 years. So that gives us $4,920 of yearly depreciation expense. But we know that they only use that asset for half of 2017. So we would have to divide that by 6/12, or half of the year to give us the value of depreciation expense for 2017, which would be $2,460. So we would debit depreciation expense for $2,460, and then we would credit accumulated depreciation equipment for the same amount, $2,460. And then for the second half of the journal entry, we need to actually record the disposal of the asset. And we learned that when they sold the forklift, they received $9,840 of cash. So we would debit $9,840 of cash first, or the amount that we received for the fork truck. And then for the next line, we would need to debit the accumulated depreciation on the equipment. And we remember that they had expected to have that asset in service for 5 years, but they disposed of it January 1st, 2014, which was only 3.5 years. So you can see here I made a chart that would our first year of depreciation expense. Again, remember a full year of depreciation expense was $4,920. So for year one, we record $4,920. Year two, our amount would be $9,840 accumulated. Year three would be $14,760. And then again in 2017, because it's 3.5 years of service, so we would multiply our original depreciation expense times 3.5, which would give us $17,220 total accumulated depreciation at the time of sale. So that's where we would get this $17,220, is that's 3.5 years of accumulated depreciation on the forklift. And then for our equipment, we would record a credit of $24,600. Again, remember, as a credit, we're depreciating or decreasing the value of an asset category. So we're decreasing our equipment assets by $24,600, and then we're asked to determine if we received a gain or a loss on disposal of plant assets. And how we would determine that is if cash that we receive for the asset plus depreciation is greater than the original equipment cost at time of sale, we would record a gain on disposal or a credit. And if a cash plus depreciation is less than original equipment cost at time of sale, we record a loss on disposal or a debit. So we would take our cash that we received for our forklift, which is $9,840, and we would add our accumulated depreciation is $17,220. Again, that's 3.5 years of accumulated depreciation. Gives us a total of $27,060. And we know that the original asset, or the forklift, cost us $24,600. So our cash that we received plus our accumulated depreciation is greater than the value that we originally paid for the asset. So that tells us that that was a gain on disposal of asset. So how we would figure that out is we would take our accumulated depreciation, again 3.5 years of depreciation, plus what we received for the asset is $27,060, and then we would subtract the original cost of the asset, which would give us a balance of $2,460. So we record that as a credit, as a gain on disposal of plant assets. And then for our final journal entry, we're asked to journalize the entry for the truck, and we learned that they discarded the truck on December 31st of 2017. So the first thing we need to do is figure out what our depreciation expense yearly for the truck is. So we take our original cost of $27,392, and we subtract our salvage value of $2,464. So that gives us a depreciable cost of $24,928. And then we divide our depreciable cost by the useful life in years, which would give us a yearly depreciation expense of $3,116. So I made this chart. Again, you can see at the end of the useful life expectancy of the asset that the total cost of their depreciation expense would be equal to their cost minus their salvage value, or the depreciable cost of the asset. So you can again double check, make sure that your depreciation ends up being the same amount as the depreciable cost. In this case it is. And so we know that each year that they had $3,116 of depreciation expense. And on the truck, they disposed of it December 31st, so that's the date that we would use for our journal entry. And our depreciation expense, we would debit of $3,116, and then we would credit accumulated depreciation of equipment for $3,116 to balance those transactions out. And then for our final journal entry, we would figure out what our accumulated depreciation on the equipment is. And we learned that they had wanted to use that truck for 8 years, but they disposed of it in 2017. So that would actually have been only 5 years or 6 years of service, excuse me, from the truck. So 1, 2, 3, 4, 5, 6 years of service gives us a accumulated depreciation value of $18,696. So we record that as a debit, accumulated depreciation, for the amount of depreciation that we received during the time of service of the truck. And then we learned that they just disposed of the truck or discarded the truck, so they received $0 for the truck itself at the time of disposal. So there would be no cash journal entry here because they didn't receive anything for that truck. And then we would credit the full value that they paid for the truck, which is $27,392. And again, we need to determine if it's a loss or a gain on plant assets. And so in this case, we can look at our cash received, which is $0, plus our accumulated depreciation for 6 years of depreciation was $18,696. So that gives us our gain or our value that we'd have $18,696, and that is less than we paid for the original asset. So that would be a loss. So what we would do is we would take the original cost of our asset, which was $27,392, and then we would subtract our cash received, which again was $0, plus our accumulated depreciation, which was $18,696, and then that would give us our loss on the disposal of the asset, which is $8,696. And again, we remember that our debit side of our journal entries need to equal our credit side of our journal entries. So in this case, just to double check yourself, $18,696 plus $8,696 is equal to $27,392. So that's another way that you can go through and check yourself. I hope that I explained everything clearly. I've gone through this several times and realized I omitted something or made an error in my explanation, but I hope between my visual charts and my explanation that it makes sense to you. If you have any questions, please feel free to comment, and I will try to explain them to the best of my abilities. Sorry for the lengthy video. Thanks, everyone.